Today I will start the block 2, the unit 1. First of all, we have discussed in the last lecture is the block 1. What will we discuss? Just I'm doing last lecture we have already discussed about the tax planning overview and the definition of tax avoidance and tax evasions and tax management. And what is the objective of tax planning? And how will be diversion of income and application of income and methods of recognized of the tax planning like is a tax holiday and deductions, reliefs and rebates, etc. And we have already checked about we have already discussed the methods recognized the tax planning and what is the objective of tax planning. Now, today I will discuss in the overview in the block 2 is unit 1. What is the meaning of a person and what is how to calculations of total incomes and grand totals for a individual persons and what is the tax slabs and we will be discuss about the practical problems how to calculation of the grand total income and how many rebates as a individual persons. What is the objective for this block study? Number one is assuming how the tax complaints of the individuals and determining the revenue generated by the governments, central governments, and analyzing the non-complaints complaints of tax regulations. And now we will be start. It is why we are discussing this block 2. Okay, now after the taxation scenario, business structure for the tax benefits and responsibilities, both person and companies. Tax planning via business structure such as individual firm, limited liabilities partnerships, LLP, and Hindu undivided family, association of person, AOP, and body of individual, BOI, provide a range to approach, maximize tax saving, and guarantee adherence of the legal framework. Now, we will be discuss that what is the meaning of person and who will be pay the tax. So here uh, we will be discuss a person, meaning of person, and what will be included a person. Here is the definition as per Income Tax Act 1961. As per Income Tax Act Section 2, Clause 31 is defined that is the definition of a person. Is here individual, HUF and company. First of all, what is meaning of individual? Natural person like is a male, female and other persons who are liable to taxation based on their income, investments and other financial activities. This includes both residents and non-residents. About the residents and non-residents, we will be discussed in another block. Now, is HUF means is Hindu undivided families. HUF can be assessed and taxed separately from their members because they are treated as a separate entities for taxation purpose. We will be discussing the more when we will be calculation of income of Hindu undivided family. Now is third point is company. Any organization that has been incorporated and is liable to corporate taxation on its income, including public and private limited business. Here is very necessary types of companies, but we here only discussing is for the purpose of taxation. The company is will be treated as a under section 2 clause 31. We will be treated as a person. We will be discussing another subjects and the types of companies and what is the roles of companies. Here we are doing discussing only for the purpose of the as a percentage. Now is a firm. What is the meaning of a firm? For taxation reasons, LLP, limited liabilities partnerships, and partnership firms and other incorporated business entities also regard as a person. We will be treated as a firm as a person for the taxation purpose. Now is firms. It will be is a maybe a partnership firms and LLP. We will be treated as a person. Association of person AOP and BOI, whether incorporated or not incorporated. First we will be discuss is AOP. And organizations that gather for a common goal other than making money can be classified as a taxable entities. Example of these types of organizations are association of persons and bodies of individuals. Now is artificial juridical person entities such as trust, estates, and other legal entities that are recognized as the separate taxable entities under the law. Now is meaning of local authorities for the purpose of taxations. Panchayats, municipal corporations, and other local governing organizations also regard as a person. Here is the 6 to 7 points includes in the definition of the person. One is individual, second is HUF means is Hindu undivided family, third is company, and fourth is firms like is a partnership firms, and fifth is AOP and BOI and local authorities, and is every artificial juridical persons like is a municipal corporations, panchayat, nagar nigam also. It is the included as a person for the taxation purpose. Now is very important points that how will we pay the tax here. We will be consider where are living and how will be what is the definition of India, where are living on the basis of residence. After person who should pay the tax, when every person may be from India whose income for the previous year exceed the maximum amount not chargeable to tax will be regarded an assessee. We will be discuss the what is the meaning of assessee after the India definitions and shall be charged will be tax on a assessee. Here is the main important points is now every person will be paid tax, but where is the living a person? So here first we will be discuss the definition of as per section 2 clause 25A what in as per Income Tax Act 1961. India definitions what will be suppose a person in the living in a Indian territory. It may be land, it may be water, and it may be air. It will be calculations. It is another chapter will be discussed how will be calculation of the residence and the definition. First is what is the meaning of India. Suppose land, the territory of India as a referred to Article number 1 of the Constitutions. It is defined to Indian Constitutions as Article number 1. The water. Its territorial waters, shapes and subsoils underlying such as water, like say Lakshadweep, Andaman Nicobar Deep Samu, and exclusive economic zone, any other zone is referred as the territorial waters, exclusive economic zones, and other maritime zones is Act 1976, 80 to 1976, and air the airspace above its territory and territorial waters. Now is main question is what is the article number 1? Article number 1 shall be a union of states. In India, in 29 states, the states and the territories there shall be specified in the first schedules. The territory of India shall comprise of territories of the states and the union territories in the first schedules, such as other territory as may be acquired. Here, I think it will be clear in the definition of income, India. Now we will be discuss about the income, and first of all, it will be clear and how will we earn the income. We have five sources of the income. First is income from salary. Second point is income from house property. Another point is income from profits and gains, and income from business and professions, and income from capital gain, and last point is income from other sources, which source cannot define easily in the income of the sources. This source of income will become under the head income from other sources. Now we will be discussed first is what is the uh, income. First here only I am discussing for is the here income from salary, and another income source will be discussed in another chapter and another below. Is section 2 clause 24 as per income tax 1961, what will be included in the salary, profit in lieu of salary, allowances or benefits for the meeting of a personal or official expenses, all is included in the salary. Obligations of the employees of his beneficiary paid by the business or professional incomes, profits chargeable tax under section 28 and 41. All the section will be discussed in the details when we will be study of the income from salary. Some received under key man insurance policies. Here I will be discuss what is the key man insurance policies. Like I'm giving to example for is Amitabh Bachchan and Andan Sami. Both person have is the for the Bollywood industry is the key man. Andan Sami is the finger has is the insurance because if he cannot using the finger for the piano is it will be only for the purpose of piano is the finger is the insurance, and Amitabh Bachchan is voice is insurance for the because his voice is very famous in the Bollywood industry. It is will be as the key man insurance policies, and contribution from employees toward insurance like is a EPF and provident funds for superannuations received for an employer. Income from business or insurance carried by a mutual insurance company and cooperative society. Income from banking carried by a cooperative societies which its member is many points in the comes for is in the income from salary. Here is only some points discussing, and voluntary contribution received by the specified trust funds, institutions, and electoral trust. Income from capital gain and income from other sources, all it is included in the income. Now it is charging of a sections. How will be calculation of the income? And first we will be total income, finance tax schedules, income tax, general tax rates, and special tax rates. Here we will be discuss first is the total income, how to calculate of total income, and it is gross total incomes. Now is first of all it is very important is not the grand total income. It is not necessary the amount of money that a person has received in hand. It is the total income earned, irrespective of whether it has been spent, saved, or invested. Now is what is the we will discuss what is the features of grand totals income GTI. First point is comprehensive income. What is the meaning of comprehensive incomes? Grand total income includes all forms of incomes regardless of their sources. We have already discussed in the sources of income, income from salary, income from house property, income from capital gain, income from business and profession, and income from other sources. This could be salary, income from salary, house property, profit business, profession, capital gain, and income from other sources. And number 2 point is pre-deduction incomes. What will be included in pre-deduction income? Grant total income is the total income before any deduction or exemption are applied. It does not take into account any tax saving investments or deduction under section 80C to 80U. I will be discussing 80C to 80U many sections in the comes for the when to calculate the total income as per income tax 1961. We will be discussing more detail in next coming slides, and in the next unit we will be discuss more in block 2. And third point is basis of the tax calculations. Grand total income serves as the starting point for calculating tax liabilities. Deduction and exemptions are subtracted from the grand total to grand total income to arrive at a total income, which is the taxable. After deductions from grand total income, it will be treated as a total income and it will be taxable income. But it is not very easy. We will be directly reach to total income. First of all, we will calculate his grand total income. Then we will go reach to the total income. And last point is indicator of earnings. GTI, grand total income, is a comprehensive measurement of an individual's or entity in the total earning. It provides a broad picture of the total income generated by an individual or entity in a financial year. Now is we will be discuss what is the total income, and after the grand total income we will be discuss about the total income. What is the meaning of total income? It is calculated by subtracting the deduction and exemption allowed under the Income Tax Act from the GTI. How will we get of the total income? So we have already grand total income. We will be deductions from GTI, then will be take when will we receive is the amount, we will get a amount, it will be total income. The resulting figures of the amount of income which a person is required to pay for tax. Now we will discuss the following features of the total incomes. Here is the four features of the total incomes. Number one is post deduction incomes. What is the post deduction of incomes? It is the income that remains after all eligible deduction and exemption have subtract from the GTI. These deduction could be under section 80C to 80U and section 24 clause B, home loan interest, etc. It means I'm talking about the deduction. All deduction will becomes under section 80C to 80U and home loan deductions it will becomes under section 24 clause B. Second point is taxable income. Taxable income is essentially the taxable income. It is income on which an individual or entity is required to pay tax. It means if you will be get a figure taxable amount you will be paid. The tax slips are applied on this income to calculate the tax liabilities. Now his third point is derived from GTI. Total income is calculated by subtracting eligible deduction. Which deduction means section 80C to 80U and exemption from the GTI. I will be discussing the more special exemptions. Section 150, 115 BC from the GTI. It is derived income as it is based on the GTI. Is gross total income. And fourth point is indicator of net income. TI, total income, provide a more accurate measure of an individual or entity in the net income. It is reflect the income that is actually available to the individual or entity for use after accounting for tax saving investments and deductions. All points is comes in the 4 points we have already discussed in the post deduction incomes, taxable incomes derived from GTI and indicator of net income. It is the feature of total incomes. Now, is the very important points we have already discussed what is the GTI and what is the TI. GTI means grand total incomes and TI means is the total incomes. Here we will be discussing the four parameters. First parameter is the definitions. What is the definition of GTI and TI? GTI is the total income earned by individual or organizations before deduction section 80C to 80U like tax and allowances. We will be discussing the what is the allowances. We will be discuss in when we discuss the salary. We will be discussing the allowances. What is the meaning of allowances? Allowances provided by the government and your employees. It's basically allowances is available for the defense services and police and paramilitary forces. It includes income from all sources such as salary, business, capital gains, and other sources. It is not possible that every person is doing is only salary. All income sources will be included in the one form, and it will be grand total income. And it is not necessary all a single person have all income from sources. Which income sources have the income, it will be added in the grand total income. If don't have any income from other sources, it not will be added. Agriculture income is the fully tax exempted, but we will be so. Now, is the total income. Total income is the income that remains after all permissible deduction under the Income Tax Act 1961 have been accounted for. It is essentially to the GTI minus the deduction. Deduction means section 80C to 80U and section 24 clause A. And taxation parameter, the second parameter is the taxation. Tax is calculated on the total income, not on the gross total income. GTI is starting from point for calculating tax. GTI is the first point where we calculate for the taxation the purpose amount for the calculations. And total income directly calculated on the total income. Our GTI after deductions, we will be get a figure. It will be taxable income, total income, and total income will be taxable. And third parameter is the components. What is the component includes in the GTI and TI? GTI include all types of income: salary, half property, business and profession, capital gain, and other sources. All five sources income include in the GTI, but in TI, total income is derived from the subtracting permissible deduction and exemption from the GTI. It means first we calculate GTI and we will be subtracting permission, deduction and exemption. Then we will get a figure. It will be total income. And fourth parameter is the purpose. Grand total incomes gives a holistic view of an individual or an organization's earnings, not a actual figure. It is the holistic view. And next point is total incomes gives a clear picture of the taxable income of an individual or organization. Total income giving a clear figure and picture of a individual person or a person and organization, everybody. Now is I will give to a conclusion is GTI and TI. Grand total income and total income are two critical concepts in the field of Income Tax Act. Everybody confused in the what is the definition of GTI and the what is the definition of TI, total income. I am giving to some points for the definition for the point of concept clearations. GTI represent total earning of a person. Person may be individual, HUF, organization, business, everybody. But here the main point is total earning before deductions, providing comprehensive view of the total income earned from all sources. It means no deduction, no exemptions, only view of your organizations in the holistic view. And now is the total income. Total income, net income subject to tax, obtained after subtracting all permissible deduction and exemption from the GTI, and this figure will be total income. Okay. Now is what is the meaning of assessee? What is the meaning of assessment year? And what is the meaning of previous years? All defined as in the Income Tax Act as per Income Tax Act 1961. Who is assessee? First of all, assessee will be a person. We have already discussed what is the definition of person. Section 2, clause 41. Section 2, clause 7 will be defined who will be assessee. Any person, any sum payable under the Act, any proceeding is taken under the Income Tax Act 1961. Assessee may be two types, is the deemed assessee and the representative assessee. Who is deemed assessee and who is a representative assessee? Deemed assessee by fault a assessee as per Income Tax Act, and a representative assessee, it means here a minor child who will be caretaking, he will be representative assessee. Next point is the assessment year, section 2, clause 9. Assessment year means the period of the 12 months. What is the 12 months? Is January, February, March, April, May, June, July, August, September, October, November, December. But here 12 months means 1st April to 31st March, not 1st January to 31st December. We will be here consider only as a financial year. Every first year, 1st April to 31st March. Conceptually, assessment year is the year in which a person's total income is assessed to taxation. मतलब अभी we have already discussed in the assessee and the definition. If we clear the definition of the person and definite, we can understand easily what is the assessment year. And I think here the again is what is the assessment year and what is the previous year. We have already discussed in the assessment year. Now we will be discuss in the previous year. As per section 2 and clause 32, 4. Clause 34 previous year means previous year as per section 3 and a previous year as the financial year immediately preceding the assessment year. Very technical points here. What is the previous year and what is the assessment year? Many financial year may be, but here clearly mention just immediately previous year, immediately preceding year, assessment year. In other words, previous year is the year when its income is earned by the assessee. Previous years means a assessee is the earned in which income is earned by an assessee. Which year is the earned in the income by assessee? It is the previous year. Now is Situation where income is previous year is assessed in the same year shipping business, residents and non-residents. We will be discussing the more details in another unit, another below the residential status of a company. Now will be discussed is the Finance Act schedule. It is here, first of all, because we are doing here is the charging sections. We have already discussed the total incomes. Now we will be discussed in the finance schedule 1 and income tax, general tax rate and special tax rates. Now will be discussed in the finance act. Okay, what is the finance act and what is the importance of finance act? What is the purpose of finance act? Now we will be discuss is the finance act. Why is the requirement is the finance act is every year will be present in the budgets. In the finance act 2024 makes some amendments to the income tax provisions. You know, everybody know that every year represent the budget in the parliament. When we present a budget, definitely we will be some amendments and changes and provisions, such as treatment of agriculture income of the country, finance ministry, maintenance. There will be no change to direct tax regime in India 2024 and 25. You know, we are I'm talking about is financial year 2024 and 25. This will be start 1st April 2024 and 2025. It means this year is 1st April 2020, 1st April 2024. Now is June 2004. It will become in the financial year 2024-25. New and old in the new financial year starting 1st April 2024 in the financial year 25, such as income tax slab set in Union Budget 2023-24 continue to apply to both the old and new regimes. Here is the choice of a taxpayer who will be want to pay tax for old regime and new regimes. It is the preference of the taxpayers. Now we will be discuss as a for here the new regime for an individual and HUF. I will be discuss in more details when you definition of HUF in the next unit 2. How will be calculation of HUF? Here I am doing discussing only individual and AOP and BOI in this unit 1 in the block 2. It is the new regime for the taxation. Up to 3 lakh is nil, 3 lakh 1 to 6 lakh 5%, 6 lakh to 1 to 9 lakh is 10%, 9 lakh 1 to 12 lakh is 15%, and 12 lakh to 15 lakh to 20%, and above 15 lakh it is the 30%. I will be discussed in the details section what is the purpose of 115 BAC and section 112A, all everything is. Now it is the surcharge. What is the surcharge? Surcharge. What is the purpose of surcharge? And what is the reason of this surcharge? Surcharge. Uh, it is surcharge on the income tax of the following dates if total income and SSE exceed specified limits. It means grand total income after deduction and exemption. The total income is your is 50 lakh rupees and between to 1 crore rupees. Surcharge will be 10% and is 1 crore rupees to between 2 crore rupees, it will be surcharge 15%. And if your income is 2 crore rupees between to 5 crore rupees, surcharge will be 25%. And above 5 crore rupees, surcharge will be 37%. But Indian government is providing to health facility and hospital. It is Indian governments have to last 10 years many hospitals facilities and health insurance bima policies is every person um, uh, is 5 lakh rupees exam all hospitals providing. Its figures it depends to state governments. Health and education says will be charged on the government. It is the 4% amount is the income tax plus charges and surcharging in different cases. In the 8 KCO, it is capital gain and dividend income, other incomes, and total income. Here is a surcharge rate on tax, capital gain is dividends. Surcharge rate 25% and 37% is not applicable on short-term capital gain. It means is case 6 and case 7. 25%, 37% is not applicable in terms of short-term capital gain. Under section 111A, long-term capital gain under section 112A, long-term capital gain under section 112 and dividend income below the table applicable rate of surcharge in the different cases. First case is 15 lakh, other income is 30 lakh, total income 45 lakh. Surcharge rate on tax on capital gains and dividend is nil. No tax surcharge. In case 2, capital gain and dividend is 50 lakh rupees, other income is 40 lakh rupees and total income is 90 lakh rupees. Surcharge will be given on the 10%. In third case, 80 lakh rupees capital gain, 90 lakh rupees other income, total income is 1.7 crore. Surcharge will be 15%. And fourth point is 2.20 crore and other income is 40 lakh, total income is 2.60. Surcharge rate on capital gain and dividends the 15%, but in other income will be 25%. Here is it is clear the 2 point code. Here it is short-term capital gain, but here is it will be treated as a other income is 25% because your total is more than 2.6 more than 2 crore rupees. Now is stage 5. 1 crore is capital gain and dividend, and is other income 2.5 crore. It is total income 3.5 crore. It is capital gain is 15% and other sources is the 25%. You are seeing here is the 15% on capital gain and dividend, but in eighth case income from other sources the slab is changed is 37%. Now we will be discuss in the after such as different cases. If you have any doubts, you can discuss with me.